Morning, welcome to Nifty Prediction. My name is Narendra. To join my WhatsApp group, I'm charging 500 rupees per month. You will get advanced prediction details as well as calls in the group. And if you like my research, if you want to support my research, you can donate me using this Google Pay and Phone Pay and Paytm. This is my WhatsApp number. You can also contact me for the details for. And let's go how the Nifty has went and closed on Thursday. Nifty ended up in the positive 15,737.75. 102.40 points in the positive, 0.65% in the positive. Opened around 15,692.10, which is well above the previous closing low. 15,648.50, which is not even come down towards to the negative side. So that is also one more indication, because all indications shown in our data is on the positive side. And 15,751.25 is the high, and it is also exactly matching. Let's go to our review how the market has went exactly as per our data prediction. Our data, all indications are shown in the positive, so we also indicated that anything opens in the positive, the market will have the potential to go bullish, because each and every data we have saw so many times, whenever all indications are shown positive, the pre-opening must have to be on that particular side. So these all indications are positive, but the pre-opening is in the negative, even 0.05 points, then this particular day would have been in a negative closing. But on this particular day, the pre-opening was in the positive, well above around 50-60 points it has opened up, so which means it is clearly supported the positive. So that is where the market is also ended up with positive, and we also add some more indications, because our frequency level in the positive as well, around minimum of 0.58%, up to 90 points we have the potential to go up. So that is also we have saw, and we have clearly pointed out that the volatile level is the very much key, and exactly the market has kept the high in the volatile level 1. So V1 is very much key, and that particular level is not able to break. Exactly, that is where the high. So the market is fall down and closed in the pivot level 15,737 around. So 1 point only the difference is. So the idea is to trade, because the previous closing we have saw so many times as well, because our stop loss is in the support level 1. So each and every day the support level 1 will be the bullish market stop loss. So that will not be changed in any day. So you can trade any number of days with these kind of levels. That is, S1 is the stop loss for the bullish market, and R1 is the stop loss for the bearish market. This is the common rule. So if the market is opening that particular side and not breaking these levels, then the bullish is intact. So at the same time, what happens is on Thursday the market has opened in between the frequency level and the above volatile 1, below volatile 2, so which is in the volatile zone, but still the market is not able to break down the previous closing as well as the bullish market stop loss of S1. So, and you can check why the market is not gone bullish towards to positive average or even 200 points, because this volatile 2 is the key. The volatile 2, if that particular stop loss, which is 15,648, 10 points is a stop loss, 48.80. So the market has broken that particular stop loss by 0.30. That is the only reason the market is not gone bullish towards 170 points or 170, 80, 200 points. Otherwise the market would have gone broken that particular volatile 1 and gone beyond even higher levels, 150, 200, something like that. This is the key, because in any day, if the market is opens in between the volatile zone, this V2 stop loss level is very much important. If it is breaking, then the high will be restricted to V1. If the level is not breaking, the V2 level is not breaking stop loss, then it has a potential to break and go beyond. Like the same, the market is open in between, then the V1 is not breaking, then it has a potential to go down. So these are all the common rules which we need to follow. And let's go to the calls. What are the calls we given in the group? In our data we asked to buy next week put option, because we knew that the market will have the potential to go bullish. So that is the reason we asked to buy next week put option of 15,300 PE for 17th June and 15,750 call option for this week contract. And the call option went 27 high from the low, around 10 to 12 it has went to 27. We don't want to take much risk, because in the when we have the both side probability, then we need to play conservatively. We need not to invest huge amount. But our software is also booked a profit in the morning itself, around 9:30 itself, somewhere around 730. And it is even in the real money also it has booked around 800. So the points has some kind of a difference because of the movement of the options, because it has bought 15,650 put option somewhere around 31.7 and exited with the stop loss of 40.30. But in the real money it was in a different price. So once the software is booking, sometimes it has a different prices here. It has bought 30.85 and exited with 40.35. That is the reason the marginal difference is there in the real money. So the software is also working pretty well. Our method is also going exactly the same. So we are happy that our levels are working well. Some high risk calls given due to we knew that if it is goes bizarre downside, because we have the pending target 15,540. So if it is reaching, then this 15,650 might go 90 to 110 only. This is for the high risk traders, because we knew that this is not for this low and safe traders. Why? Because we knew the market might not fall down this particular day. So only we asked to take risk some 1,200 for the high risk traders. And the call which morning given, it has went high around 27 and traded somewhere at that point of time around 21. So we asked to exit at that level as well. But whoever want to take risk, they can take risk. We asked to exit at that particular time as well. And the Nifty has the potential to fall, because of in the 15-minute chart it has shown the high is kept in the kind of which is called, it is a doji with a or downside hammer signal like that in the 45-minute chart. So it has fall down initially, but still it is not fall down that much error as well. And our data, the market has almost oscillated in the frequency average level 15,726 for such a long time. And then it has gone up a little. And this is the important indication which I given in our group, which if the pre-opening is in the positive, and the condition is if the negative side the market is not touching, then we have a good chances to go bullish. So that is what I highlighted here. You can check. This is what the hint which I mentioned specifically. If the market is not touching the negative even a point, then we have a good chance to go bullish as well. So these are all the conditions. That is the reason we bought it, that 15,300 put option for the next week contract, right? Because we knew that market might have the chances to fail to go down, and the low is also matching in the levels as well as the volatile level. So and this is the bullish market stop loss. So this is what I talk about, the bullish market stop loss, which is in the support level 1. Always it is in the support level 1 with minus 10 points. So 15,592 is the stop loss for the bullish market. Let's go to the prediction for Friday. Friday is also typically the same what we saw on Thursday. All indications are shown in the positive. So we need to watch out how the pre-opening is going to be, and these are all the support levels and resistance level. Only thing is the market is must not to open below 20.46. Anything pre-open below that 20.46, which activates the extreme bearish zone, and we have the bearish warning signal as well. So if it is not breaking the overall average stop loss of 15,823.29, then it will go bearish even to 132, even 237, or even 350 range on the downside. So it is in the extreme bearish zone. That is the only thing, the pre-opening we need to check out. But it is having the potential, after gone down it has the potential to come up if the market is on the positive side with a condition of less than 20.46. On the other hand, if the market is opens in between the volatile to V2 and V1, then the exact the same scenario. If the market is not breaking the V2 stop loss, then it has a potential to go bullish. Even 192 or even 225 is also possible if the V2 stop loss is not breaking. So V2 stop loss 15,748.21, we need to watch out. This level must not to break, then only it has a potential to go even 225 points, even 190, 199, like that. So we need to watch out. And the frequency is also having 136 points in the positive, so that is also one notable point we need to watch out. So all we need to check out the pre-opening, whether it is going to be above V1 or below V1. If the below V1, it is attracting downside with a stop loss. With above V1, we need to keep stop loss in the support level 1 with the bullish market and go towards to bullish one. Only thing, the support level 1 is the normal bullish market. It will have the restriction to keep in 100 points range. It will not go beyond that level if the market is breaking the V2 downside, but must have to open in between the volatile 2 and volatile 1. So the condition you need to understand is very much clear, otherwise it will not work out. So pre-opening anything in between, then it is having the potential to go bullish for the stop loss of S1 for the normal bullish. And if the stop loss is here itself, then it has a potential to go extreme bullish as well. And these are all the conditions I have mentioned, so you can read anything or touch even in a downside or pre-opening even in a negative, then the bullish market is doubtful, so it will go bearish as well. And the par value is also indicating the same. It has a potential to go somewhere new target once again up to 144 points, but it is activating the negative target 1 2 3 and low, which is pointing that up to 1.70%, which is 268 points, having the potential to fall down if the bearish is catching. So pre-market must have to be followed accordingly. And these are all the support stop loss for the extreme bullish market. It has to open above this level, stop loss need to be maintained. This is doubtful, so it will not happen. The normal, this is bullish market might have the chances today once again because of the pre-market. If the pre-market in the negative, then this is also doubtful. And the extreme bearish market, this has the chances to happen, because if the market pre-opening is below this level and not breaking this particular stop loss, then we have a good chance to go extremely bearish to today, because we don't have any positive target till now. We are having only downside target as well. And these are all the downside targets. So pending targets, we have too much. Yesterday we don't have got any new target, so we have the pending target once again, which is 15,543. so if the pre-market is on the downside, then it has a potential to hit. Only concern is how the pre-market is going to be, then only we have the potential to hit this frequency average, which is in the positive 0.87. anything opens in the negative, then this might not happen today. So we need to watch out how the pre-market is going to be. Let's see how the market is going to give us on Friday. Thank you.